All right, all right. You see the thumbnail, you see the title on Robert Kiyosaki's insights on a recession near way or a crash, or virtually they're the same thing. But I do want to go ahead and play a clip for you on his views when it comes to this. Let's jump right into it. Hopefully, you can hear this.
There's more opportunity today than ever before, but not if you've been brainwashed into going to school, getting a job, paying taxes, live debt free, and invest in the stock market. You know, this bubble right now, Adam, is a bigger bubble than 2008. This is the
All
everything bubble.
right, and
You know,
there
it's,
you
it's going
go.
to be now.
So when it comes to this, his experience sharing what he goes into, what I've learned, and first and foremost, almost forgot. Welcome everyone. How rude I was when it came to that. Boom. All right, already had to give myself the buzzer, but I appreciate everyone so much for being on these. Go ahead and like as you view this and comment with anything below because I truly do love hearing from you. Go ahead and comment with where you're from. I'm here based out of Houston, Texas. Well, I'm based out of Houston, Texas. So let's jump right into point number one. When it comes to Robert Kiyosaki's views on the housing market crash prediction that he does have. And what he really goes into is he's been saying a crash has been coming or a recession for, years now. So I would say when someone says it enough that at some point they will actually be right. But what he really goes into is that this is the opportunity of a lifetime. And he's not so much on the doom and gloom. He looks at it as, okay, this is the opportunity that you now have if you're able to seize it. And as a prime example is that the lens of a buying opportunity. And what that means from the lens of it being a buying opportunity is that deals will start to come up. And what I want to allude to this is that as an example is I'm starting to see, and especially speaking with other investors, it is shifting to more of being a buyer's market. And what I mean by that is and it's not entirely a buyer's market. And of course you've got industrial, you've got retail, you've got residential when it comes to single families, and you got commercial when it comes to multifamily. So each sector is different. But as an example, when it comes to the residential side, that is started to see a softening. And as an example, there's a single family house just right across the street from me. And I've seen that's been listed for a while. There's been multiple people going in and out of it as far as showings. The grass isn't that cut. And this is a property that has just been renovated. And I've spoken with other agents as well, and they're starting to see the same thing. So this goes back to what Robert Kiyosaki is looking at it as. This is the biggest opportunity for those who are ready and prepared for it and not fearful. So that's just what I want to touch on and the angle that he takes. And the next point that I want to go to is the house of cards that I see as the I'll show you as a prime example. So as I'm shooting this is the CPI report, the Consumer's Price Index is actually going to be coming out tomorrow to see whether or not inflation has still continued. And then that will determine which they're likely still going to raise interest rates about 0.75. Which is 75 basis points, or they could do a full point. Who knows? Or maybe half. Let's say 50 basis points. It's likely they'll do 75. But this is with the rising of interest rates, it's just really going to be a sum total of multiple things that are just going to fall at once. And this is one share that I have for you. Here we go. Let's go ahead and go into this. Right. I'll share the entire. I'll just share a tab. Is here in parts in Texas, as an example, is property taxes have started to go up. And what I've seen, just understanding human nature, and when people buy property, is they buy property based upon how much they can actually afford. So they will look to max out and buy as much as they actually can be able to obtain with that. And in cases that many people were not expecting for their property, their values to go up as drastically as they did. And what happens is those got reassessed at a new value. And when they get reassessed at a new value is, guess what? Your property taxes go up. So people did not consider this, and they don't have much carried over to actually take care of these taxes, these increased taxes. So what's going to happen is most that aren't able to afford it is they'll have to sell the property. And now what happens is they're now selling a property, their house as an example, in a market where the interest rates are going up, which in that case is people are not able to buy let's say houses and property for as much as they formerly were, because now their interest payment is up. So now that's causing prices, that's going to start to cause prices to now come down. And then now it could be in the case to where there's going to be an over supply, and then the control is going to start to shift more to the buyers in that case. And Robert Kiyosaki also mentioned in this example here that let me go ahead and stop sharing screen, is he mentioned on just a recent episode with Ken McElroy that how he was walking, he was negotiating with someone who their property was 70% vacant. And he said, I'm not going to fall on a falling knife. Essentially is that preferably you would buy the property when it is actually completely vacant in that case, because you're not taking over on that type of problem where it's actually declining. You rather take it on when it's completely declined, and then you could take it over in that case. So just going back, and this is one thing is I went to this is a retail space that was just around an office space. That's what I meant to say. It was WeWork, and I went to the top floor, and I'll tell you all, I was absolutely baffled on the amount of vacancy that was not only in that building, but also that was on that top floor. It was like it was a ghost town of people that were not there. And you have to consider is if it's that heavily vacant, is there still a mortgage that is due on that property? So this is what I was alluding to earlier, how there's different sectors that are actually being more affected than others. With multifamily, for instance, have seen from me speaking with other investors is there's still quite a bit of demand there, because one, with the rise of inflation and also interest rates, is rents have still been increasing as well. So that also has been a way to combat that or offset it. But there's in some other markets where it hasn't offset that. And I was speaking with an investor that they received a BOV, so a broker's opinion of value on the property, and they had determined that, well, I'm just not going to sell. I'm not going to sell the property because I'm not even going to get close to where I actually want. And what they were wanting was actually not way out of market. It was actually within reason on that side. So that's what I just want to go on, that is that with Robert Kiyosaki's housing prediction and the crash that he sees forthcoming, is he looks at it as more of a opportunity. And the thing is, as long as you stick to the fundamentals, you'll be good. And what the fundamentals mean, I mean by this is, one, buying right. And buying right is just not overpaying for a property. And I was just on the podcast with a good friend of mine. His name is Tate. His podcast is Apartment Gurus. And on that is just buying a property, banking on appreciation, meaning that you're going to buy it now and it's just going to go up in value. And that's when you're actually going to be able to make your money. That's where you'll end up getting in trouble. So that's buying right. Second is financing right and not putting too much debt onto your property. And what this means is, because it took me a while to figure what over leveraging and what is it, putting too much debt onto your property, is that putting more than, I would say personally, 70 to 75% debt on your property. So if you have a $1 million property, is not putting more than $700,000 to $750,000 of debt that you actually want to bring more equity to the table. It's a down payment. And that helps is in the event rents start to pull back. As an example, a pandemic could happen. Yes, a pandemic could happen. Let me go ahead and pull this up, which that would not be good. So which is how most people were in during that time, because many tenants weren't just able to pay their rent in that case. And then in addition, they weren't able to pay their rent, which now they don't have. As an operator, and I experienced this, is now you don't have enough income coming in. But guess what? That mortgage is still due, and that principal as well as those interest payments. But if you have a high enough, if you put on too much debt onto the property, you are still obligated to that high amount. And that's where people end up getting themselves in trouble, when they put too much debt. So that's the second. The third is buying in good to great locations and not buying in the hood. And I can say not buying in the hood, you guys, because I actually was born in the hood. Yes, I ended up coming from that environment. Luckily, I ended up getting out of it, but it's just not a good place to invest in. That's just my personal opinion. It looks good on paper, but the actual execution is the difficult part. And I was speaking with an investor from California during a strategy call that I do. And if you want to hop on a strategy call with myself, go ahead and just comment below on that. Happy to hop on a call with you. And during that call they had a duplex, and they were trying to figure out that I cannot rent this other side. I've been having it's been difficult, and they were actually blaming a little bit on the property management company. And I asked them, where'd you buy the property? They said it's in XYZ neighborhood, which was Brightwood, which is a very rough neighborhood. And I just told them point blank, you bought in a bad neighborhood. That's what happens when you buy there, is that one, just it's difficult to find a quality applicant. Good, and I'm saying applicant, and applicants, and I'm not referring to actual human beings. I'm saying applicant. So even though but you get where I'm going with that. So there's that side, and then also you got high vandalism. You got a high amount of turnover, because people who live in those neighborhoods don't want to stay there, and a lot of times the school is not that good too. So these are all the things that you're going up against. And then the last but not least is manage right. You can turn a bad manager can turn a good deal to a bad deal, and a good manager can turn a subpar deal to a good deal. So it's the same thing, as you got to manage right. So those are really the four fundamentals that I wanted to allude to on that. So that's all that I have for you all. I know I pretty much got in and got out with that. Go ahead and comment below on, do you believe we are in a recession? Or do you believe there is a upcoming recession? I believe, we're actually, just my personal opinion, we're in a recession. And many of the times when they say that we're due for a recession, that means we're already in a recession. And when they actually claim we're in a recession, that means we're coming out of the recession. But we'd love to hear your view on that. But I'll go ahead and catch you next time around. I appreciate you all so much. And don't ever hesitate to reach out to me at any point in time. Until then, keep being awesome. Thank you. All right.